All right, so you want to get inside the head of Charlie Munger, huh?
Well, he's one of the most fascinating thinkers out there, especially when it comes to investing.
And we're going deep on this one, right? I mean, we've got articles, speeches, all sorts of stuff to pull from.
Yeah, a real treasure trove of wisdom to unpack. And luckily, I've got a true Munger aficionado here to help us make sense of it all.
Exactly. So get ready, because we're covering it all. His famous lattice work of mental models, how he sees risk versus speculation, and what actually makes a business great.
Which, by the way, isn't always obvious.
Right. Not always what you'd expect.
Speaking of not obvious, this whole lattice work of mental models thing, it's kind of Munger's trademark.
Yeah, he's always talking about that.
It's all about using different disciplines, psychology, history, physics even, to get that bigger picture.
So instead of just like having one tool, you've got a whole toolbox.
Exactly. You wouldn't use a hammer to tighten a screw, right?
Yeah, makes sense. Different situations, different approaches.
Right. And Munger says having this range of mental models, it helps us make better decisions in investing and in life, really.
Okay. So what are some of these mental models, the really useful ones?
Well, one of his absolute favorites is the idea of incentives.
Incentives.
Yeah. He believes that understanding how incentives drive behavior is absolutely crucial and crucial. He often talks about how even the smallest misalignments in incentives can lead to massive unintended consequences.
So like, okay, if a salesperson gets a bigger commission for selling the more expensive product, then they might not always be putting the customer's best interests first.
Precisely. It's not always about malicious intent, right? It's just that those incentives shape our actions in powerful ways. Munger even uses this model to analyze things that you wouldn't think are related. Like, why did all these oil companies suddenly get obsessed with fertilizer?
Fertilizer.
Yeah. It didn't make sense for most of them strategically, but they all jumped on the bandwagon anyway.
I mean, if everyone else is doing it.
Right. That's the danger of social proof, another one of Munger's key models. We tend to follow the crowd even when it's leading us astray.
So you get these stock market bubbles, everyone piling in, thinking they're going to miss out.
Exactly. And then, boom.
So these mental models, they really do apply to investing. That's fascinating. Are there other mind traps we should be aware of?
Oh, absolutely. For example, there's this thing called the authority misinfluence tendency.
Meaning what? We're suckers for anyone in a suit.
Well, it's more than that. We're hardwired to trust experts, even when they might be wrong.
Okay, I've definitely bought things I didn't need because a smooth-talking salesperson convinced me.
Right. Those limited time offers, they get us every time. That's authority misinfluence at work.
Gotcha.
And it gets even crazier when you combine multiple biases. That's what Munger calls the Lollapalooza effect.
Lollapalooza effect. That sounds intense.
It is. Think of a high-pressure sales situation, like a timeshare presentation. They use scarcity, social proof, even reciprocity, those free gifts, to make you feel obligated.
Oh, I hate those.
All these biases working together to create this irresistible urge to buy, even if it's a terrible decision.
Okay, I'm starting to get a little scared of my own brain now.
Don't worry, awareness is the first step. Munger also talks about our reason-respecting tendency. It's like we crave explanations even for things that don't make sense. We need a justification for our actions.
So even if it's bogus, we want that story, right? Like if someone is trying to sell me a bad investment.
Exactly. They come up with this elaborate story, and the more complicated it is, the more believable it seems, even if it's utter nonsense. That's why Munger is such a proponent of critical thinking. Don't just take things at face value. Question everything.
Okay, so it's not just about being smart. It's about thinking critically. Got it.
Right. And this brings us to another crucial Munger concept, the circle of competence.
Circle of competence, meaning stick to what you know.
It's a bit more nuanced than that. It's about really understanding the boundaries of your expertise and being honest about what you don't know.
So being a jack of all trades, not really the best approach.
Exactly. Munger argues it's better to be a master of a small domain than a mediocre dabbler in everything.
Huh. So sometimes knowing less actually makes you a better investor.
Absolutely. Think about someone like Rose Blumkin, the founder of Nebraska Furniture Mart, built a multi-billion-dollar business by sticking to what she knew, furniture.
Wow. Okay, I see the wisdom in that. But how do you apply that to something as complex as investing?
That's where the distinction between investing and speculation comes in, a distinction Munger constantly emphasizes.
Well, yeah, but how do you actually tell the difference? Isn't all stock buying about hoping the price goes up?
Munger compares it to betting on horses. You could just look at the odds and pick randomly. That's speculation. Investing is like researching the horses, their jockeys, their track records, understanding the factors that contribute to their performance.
So it's about due diligence, not hype.
Exactly. Munger is very critical of things like technical analysis, where people try to predict market movements based on charts and patterns. That's pure speculation to him.
So no get-rich-quick schemes.
Definitely not his style. He's all about patience, discipline, and a deep understanding of the businesses you invest in.
Speaking of businesses, what does he look for? What makes a business truly great in his eyes?
He's got this term he uses constantly, a moat.
A moat, like a castle.
Exactly. It's about that durable competitive advantage, something that protects a business from its rivals.
So what are we talking about here? How many archers do you need on your walls these days?
Laughs.
Yeah.
Well, not exactly archers, but the principle is similar. Munger looks for companies with advantages that are hard for competitors to copy or overcome.
Give me some real-world examples.
Well, one classic one is brand power. Think Coca-Cola. They've built an incredibly strong brand over decades.
Yeah, I mean, people are fiercely loyal to their Coke or Pepsi.
Exactly. And that brand loyalty gives them a massive advantage. Another type of moat is what we call network effects,
Network effects, yeah.
where a product or service becomes more valuable as more people use it. Think of something like American Express. The more merchants accept their card, the more attractive it is to cardholders, and vice versa.
Okay, yeah. Powerful stuff. But couldn't they disappear over time? I mean, new technology could come along, disrupt everything.
You're absolutely right. Moats aren't static. They can be eroded or destroyed. Think about Kodak, the film company.
Oh, yeah.
They completely missed the digital revolution.
So even the strongest moats, not invincible.
Precisely. That's why Munger prefers to buy moats rather than try to build them from scratch.
Meaning what? Like acquiring companies that already have those advantages.
Exactly. He believes that Berkshire Hathaway's strength is in recognizing and capitalizing on existing advantages.
So that's part of their secret sauce, huh? We've got mental models, the circle of competence, these moats. But how does all this fit into the Berkshire Hathaway model itself? What makes it unique?
Well, that's a great question for our next segment, because the Berkshire model is fascinating. It combines decentralized operations with centralized capital allocation.
Wait, how does that even work? Sounds kind of contradictory.
It is, in a way, but it's also incredibly effective. It's how they leverage the best of both worlds. Skilled managers who know their businesses inside and out, but with Munger and Buffett making the big picture financial decisions.
So they're like the master chess players, moving the pieces across the board.
Exactly. They give their managers a ton of autonomy, but keep a tight grip on where the money goes. It's how they avoid the bureaucracy that can bog down big companies.
Okay, so it's all about finding the right people, trusting their expertise, and then giving them the freedom to do what they do best. And we'll dive deeper into that in our next part.
Welcome back. Now we're going to get into some of those quirks of human psychology, the kind of stuff that can really trip us up, especially when it comes to investing.
All right, lay it on me. I'm ready to confront my own biases.
Well, Munger, he's got this whole fascinating list of psychological tendencies that influence how we behave, often without us even realizing it.
Okay.
He calls them Mungerisms.
Mungerisms.
Yeah, Mungerisms. So almost a cheat sheet for understanding that irrational side of human nature.
Okay, so let's hear some of these Mungerisms.
Yeah.
What are the tendencies we should be watching out for?
Well, one that's super relevant to investing is what he calls the disliking-hating tendency.
Disliking-hating.
Yeah. It's this idea that we often make decisions not based on logic, but based on our emotions.
Oh, I can see.
Like if we dislike someone or something, we might just avoid it altogether, even if it's not in our best interest.
That makes sense. If I had a bad experience with a certain type of investment, I might be hesitant to even go near it again, even if things are totally different now.
Exactly. Or imagine a company with a CEO you just can't stand.
Uh-oh.
You might be tempted to sell their stock, even if the business itself is doing great.
Right.
It's emotional, not rational.
Yeah, okay. But how do we overcome that? It's hard to just shut off your emotions, right?
It takes discipline, self-awareness, for sure. And speaking of tendencies, there's another one that really trips us up. The inconsistency avoidance tendency.
Inconsistency avoidance.
We humans, we crave consistency, so we cling to our past actions, our past beliefs, even when they're proven wrong.
Oh, I'm so guilty of this, like doubling down on a bad investment just because I didn't want to admit I made a mistake.
Classic example. Or think about a CEO who's stubbornly sticking to a failing strategy.
Oh, yeah?
because they've been publicly advocating for it for years. It's all about saving face, even if it's hurting the business.
Pride before the fall, right?
Exactly. And in investing, pride can lead to some pretty big financial falls. So Munger stresses this, the importance of being willing to change your mind when new information comes along.
Yeah.
Even if it means saying, hey, I was wrong.
So being flexible, adaptable.
Key in the investing world. What other Mungerisms are out there? Well, there's the curiosity tendency. Munger, he's a lifelong learner.
Yeah, I've heard that.
And he believes that curiosity is crucial, both for personal growth and for investing success. But he also warns about excessive curiosity.
So be curious, but don't go chasing every shiny object.
Exactly. It's a balance. Exploring new ideas, but staying focused on your core expertise.
Like exploring a new city. Yeah, you want to see the sights, but you don't want to get lost down some random alley.
Perfect analogy. There's also the Kantian fairness tendency.
Kantian fairness.
Munger's argument is that humans, we've got this innate sense of fairness, and we're often willing to even punish those who violate those principles, even if it's not in our own self-interest.
So we'll boycott a company even if their products are cheaper, if they've been accused of doing something unethical.
Exactly. Think about whistleblowers.
Oh yeah, big risk.
Risking their careers to expose wrongdoing.
Wow.
So it's a powerful force, this fairness tendency, but it can cloud our judgment if we're not careful.
Right, so finding that balance.
Always about balance. Now this one you'll relate to for sure, the envy-jealousy tendency.
Oh yeah, everyone's felt that.
Comparing ourselves to others, their successes can trigger those negative emotions.
Comparison is the thief of joy or something like that.
Exactly. And in investing, this can be dangerous, like chasing that hot stock because your neighbor made a killing.
Right, so focus on your own goals, not what everyone else is doing.
Precisely. And then there's the reciprocation tendency, our strong desire to return favors.
You scratch my back, I'll scratch yours, that kind of thing.
Exactly. And this one, it can be manipulated, especially in sales. Think about a company that sends you a free gift or a discount.
Oh yeah?
They're hoping you'll feel obligated to reciprocate by buying something.
Those free trials that end up costing you a fortune.
Right. Munger cautions against this. Make decisions based on logic, not on that feeling of obligation.
So be careful. Those freebies might have strings attached.
Indeed. Okay, here's another one. Influence from mere association tendency.
Influence from mere association. What is that?
We tend to link our feelings about one thing to something else that's associated with it, even if it's not logical.
So like branding.
Right. Companies use celebrity endorsement.
Oh yeah?
Or associate their products with positive emotions.
I get it. Like, if my favorite athlete endorses a certain brand of shoes, I'm more likely to buy them, even if they're not the best shoes for me.
Precisely. It's all carefully crafted to influence our perceptions, our spending habits.
Like, don't judge a book by its cover, but we all do it, right?
We do. That's why it's important to be aware of these biases. Make decisions based on facts, not just emotions.
Okay, this is a lot to process. It's like, we need a mental detox after all this.
Right.
But it's fascinating stuff.
It is. This is the brilliance of Munger. He helps us understand ourselves better. And that's key to making smarter decisions.
Right, not just about investing either.
Exactly. All areas of life. Okay, we've covered quite a few Mungerisms now. There are more. But let's move on to something else, shall we? This one is often overlooked, but it's super important. The simple, pain-avoiding psychological denial.
Pain-avoiding denial. I think we all do that.
We do. It's human nature. We avoid unpleasant things, especially if it means taking difficult actions.
Like ignoring bills because dealing with them is stressful.
Exactly. Or refusing to admit an investment is going south because selling means admitting you messed up.
Oh, been there. Way easier to pretend everything is fine.
It is. But that can lead to even bigger problems later on. Munger's point is, you gotta face reality head on, even when it's tough.
No burying your head in the sand.
Nope. Okay, ready for another one?
Hit me.
This one is a biggie. The excessive self-regard tendency.
So basically, we all think we're awesome.
Well, yeah, but it's more than that. It's this tendency to overestimate our own abilities.
Like how everyone thinks they're a better than average driver.
Exactly. In investing, this can be dangerous. We might take on too much risk, thinking we're smarter than the market. Or we fail to diversify, convinced we can pick all the winners.
Humility. Important in life, important in investing.
Absolutely. Recognizing our limitations, being open to different viewpoints. This helps us avoid those overconfidence traps.
It's not just about crunching numbers, it's about understanding how we humans behave, right?
Precisely. rational and irrational. That's what makes Munger's approach so unique. He blends business and finance with psychology.
Okay, officially hooked on Mungerisms now. But how does this tie into his investment strategy? What does he actually look for when he's evaluating a company?
Well, that brings us to one of his most famous concepts.
Yeah.
The idea of moats.
The moat. We touched on this earlier. I'm ready to dig deeper.
All right, let's do it.
All right, final part of our deep dive into the mind of Charlie Munger. We've saved some of the good stuff for last, right?
Definitely. We're going to talk about the ethical side of investing, which is something you don't hear too much these days.
Yeah, I'm intrigued. Ethics and investing, how do those go together?
Well, Munger, he believes very strongly that ethical behavior is not just the right thing to do, but that it's essential, absolutely essential for long-term success in business.
Interesting. So it's not just about making money, it's about making money the right way.
Precisely. Munger often talks about this, about building a seamless web of deserved trust. His argument is that when people trust you, they're more likely to do business with you. And that trust, it translates into lasting value.
Makes sense. I mean, nobody wants to do business with someone who's shady, even if they promise big returns.
Exactly. And Munger, he really walks the walk on this. He's known for his honesty, his fairness, his transparency.
So integrity is a big part of his philosophy. What about his views on debt? I have a feeling he's not a fan of those buy now, pay later deals.
You would be right. Munger is famously debt averse. He sees it as a trap. Something that can take a promising business and turn it into a disaster really quickly.
Yeah, like building a house of cards.
Yeah.
One strong wind and it all comes tumbling down.
Perfect analogy. Financial leverage, it can be tempting. But it also magnifies your losses if things go wrong.
So slow and steady wins the race, especially with debt.
Absolutely. Munger prefers companies that are conservatively financed. Strong balance sheet, that's what he looks for. He's even said that he's willing to walk away from a deal even if the potential returns look incredible if the debt level is too high.
Wow, that takes discipline. It's like resisting that extra slice of cake even when it looks delicious.
Sometimes the best investments are the ones you don't make.
True enough. So we've got ethics, being smart about debt. What else? Oh, he also talks a lot about the importance of finding exceptional managers.
Absolutely. That's a key part of his philosophy.
So what's the Munger checklist for a great leader? What does he look for?
Well, first and foremost, it's integrity. That's non-negotiable for him. A manager's character is as important as their competence.
So no brilliant jerks allowed.
Not if he can help it. He wants leaders who are not just smart and capable, but also ethical, trustworthy.
Right, you don't want to work for someone you can't trust.
Exactly. Munger also looks for managers who are passionate about their businesses. They've got to have that long-term vision. He's not interested in those short-term profit chasers. He wants builders, people who are dedicated to creating something that lasts.
So it's that rare combination of head and heart.
Precisely. And once he finds those exceptional leaders, what does he do? He gives them tons of autonomy. Remember that whole decentralized structure we talked about?
Trust the generals to fight the battles.
Exactly. Munger believes that the best managers, they thrive when they have the freedom to make decisions, take calculated risks.
So it's finding the right people and then getting out of their way.
That's a big part of it, yes.
Yeah.
But it's not just about giving them autonomy. It's also about aligning their incentives with the long-term interests of the company.
So it goes back to those mental models.
Yeah.
Make sure you've got the right reward system.
Precisely. Munger, he's a master at designing these compensation systems that encourage the right behavior. Get those managers thinking like owners, focusing on that long-term value creation.
Wow, this has been an incredible journey. I feel like we've pieced together a giant puzzle, revealing that picture of Munger's investment philosophy.
It's a beautiful picture, isn't it?
It is. And it all fits together so well. The mental models, the ethics, the debt aversion, those exceptional managers, the unique structure of Berkshire Hathaway. It's a complete system.
Exactly. It's holistic, it's effective, it's Munger.
I'm definitely feeling a lot more Munger educated now. And, even after all this, I still feel like we've only scratched the surface.
We have. But hopefully this has given you a taste of Munger's thinking, sparked your curiosity to learn more. He's a real original.
He is.
Master of so many different disciplines. And he's a constant reminder that learning is a lifelong process.
Absolutely. So we've learned about mental models, moats, the importance of ethics, sound financial principles, finding and empowering those great leaders. This stuff, it can benefit us in all areas of life, not just investing.
Couldn't agree more. And remember, this is just the beginning. There's a whole world of knowledge out there. So stay curious, keep learning, and never stop questioning your own assumptions.
Love it. Thanks for joining us on this incredible journey into the mind of Charlie Munger. We hope you enjoyed it and maybe even learned a thing or two along the way. Until next time, stay curious, stay informed, and keep those brains buzzing.